Welcome to Conversations. I'm Muqtedar, your host, and today I'm going to talk to you about the outlook for the Asian economy for 2025. How is Asia going to do? Is it going to grow, or is it going to experience inflation, or there's going to be challenges as a result of the uncertainty in the international trading environment, etc. So, the whole purpose of today's conversation is to look at the factors which are going to impact the economic growth and development of Asia as a whole. And I will point out to certain indications which, for policymakers, it might be important to keep in mind. But before I identify what I think are the main issues and variables that will impact the Asian growth in 2025, please subscribe to Khanversations, like this video, press the bell icon, and don't forget to share this video with your social political network. Do press the bell icon, because if you don't do that, then you won't get notifications of my videos. And if you want to support Khanversations, you can always do that by joining the channel and becoming a member of the channel. So after reading up on this, I've concluded there are about four factors which are going to have an impact on the growth of Asia. According to the Asian Development Bank, the prediction or the forecast is 4.9% growth for all of Asia. But most investors think that is a bit optimistic. So some of the big hedge fund investors in Asia, for example, I think this is a Japanese firm called Nomura, they make a very strong and compelling argument that the forecast for 2025 is going to be about 3.9% growth for all of Asia without Japan. The Asian Development Bank's forecast for 4.9 is also without Japan. They call it ex-Japan. And we will talk about why Japan is often excluded while looking at the GDP growth of all of Asia. The GDP growth for Asia was around 4.3% for 2024. So you are going to see a clear decline by about 0.5%. So it will go from 4.3 to essentially 3.9% in 2025. So roughly a little less than half a percentage point loss in the whole continent's growth. Now, Japan has been experiencing, has been in recession for decades, and its growth has really slowed down. And that's why if you add Japan to the mix, then it gives a wrong impression, because it is the second biggest economy in Asia. So if you add data from Japan to Asia, then Asia begins to look very sluggish. And so for investors, etc., it becomes less attractive. So often I think institutions which are interested in promoting investments in Asia Pacific region, in ASEAN countries, in China, etc., prefer to share data without Japan. Japan's forecast is about 1.25%, and they seem to be happy with it. That the economy of Japan in 2025 is expected to grow by 1% or 1.25%. It is going to be like Japan, like France and Germany, whose forecasts are around that, about 1% each. So it's a developed economy already. Usually developed economies have low growth rates because their base is very large. So, for example, the United States is projected to grow at about 2.7%, and that's going to be very robust, really. So Asia's growth forecast is 3.9% for 2025, which means that there is going to be slowing down of the economy. And what are the reasons? What are the headwinds which are going to cause this slowdown is what this conversation is all about. But before that, let me give you a small, broad perspective of the Asian economy for those of you who don't really look at it from that perspective. So the Asian economy is about $40 trillion. It is about 40% of the global economy. The global economy is about 105 trillion dollars, and Asia is 40 trillion dollars. So if you look at this chart, you can see the breakup. China is about 45% of the Asian economy at $18.3 trillion, followed by Japan, which is in the number two spot with $4.1 trillion. So you can see Japan is just shrinking. And India is at $3.9 trillion. Some forecasts will show India as 4.1 or even $4.2 trillion. Those are using, I think, a lower dollar to rupee conversion rate. As you know, the rupee has been falling steadily since October. Right now, I think it is about 87.4 rupees per dollar. And so the more expensive dollar becomes, the smaller India's GDP becomes in dollar terms. So, for example, if the dollar was, say, 70 rupees, then India would be way bigger than Japan in terms of GDP. So that's why the dollar figure of India's GDP expands and shrinks based on the conversion rate for the dollar with regards to rupee. So India is a third big economy, and you can see that India and both Japan are roughly around 10.1% and 9.5%. So basically, between Japan, China, and India, you could say that 65% to 70% of Asian economy are these three giants. Rest of them are all very small economies, except for Indonesia, South Korea, Turkey, Saudi Arabia. These are the four countries which are kind of above $1 trillion. So Saudi Arabia, Turkey, South Korea, and Indonesia are above $1 trillion. The rest of them, including Taiwan, are below $1 trillion. And so these are the three big economies which determine the direction of Asian economy, Asian trade, etc. In terms of ranking, you can see this table, which shows that these are the rankings. China is number one, Japan number two, India number three, South Korea at $1.9 trillion with a 4.7% share of the Asian economy. Its share of the global economy will be less than 2%. It will be around 1.5%. Indonesia is the fifth biggest economy in the region, followed by Turkey, Saudi Arabia, Taiwan, UAE, and Singapore, which are both about $500 million each, $500 billion each. But these are really small city-states whose population of Singapore is about 5 million or a little bit more than that. United Arab Emirates population is even less than that. It may have a lot of expatriate population, but the citizens are way less in number. So this is the size of the economy, but the factors which are going to impact, clearly because of both India and China, and of course Japan. Japan is perennially experiencing slowing down of its economy, but both India and China are experiencing a decline in the growth rates of their economy. So India, for example, was growing at about 7% for the last 3-4 years. The forecast is around 6.4 to 6.8. Roughly, the IMF and other international institutions are predicting around 6.4% growth rate for India. The RBI says it's between 6.3 and 6.8% growth. And China's growth rate is projected at 4.6% growth rate for 2025. So as these two economies slow down, they slow down all of Asia. So the first factor that is going to impact Asian growth and development is growth both in India and China. One of the factors for the slowing down of both India's as well as China's economy is domestic demand. So the domestic demand is low. In the case of China, until recently, until the current holiday season, deflation was one of the causes. So prices were falling. So there's no reason to buy things now, because if you wait a little while, it'll become cheaper. So people were hoarding money rather than shopping. So for example, if you wanted to, like I'm thinking of getting a new iPhone, mine has become very, very old. So if I knew that a week later is going to become cheaper, I will wait for a week to buy the phone. And if I know that if I wait for a month and the phone is working fine, then I might delay purchasing. So deflation basically reduces consumer demand. And so people don't buy stuff, even if they need it sometimes. So that is what was happening in China for more than a year or so, that because of deflation, there was less consumer demand. So because there's less consumer demand and the price was going down, then China manufactures such a lot of things. China was exporting it. So China was trying to compensate for domestic demand by increasing its manufacturing capacity to export, and it raised its manufacturing capacity to 50% of the global economy. Now, nearly everything, half of everything that is made all over the world is now made in China. So that is one reason why Asian economies will go down. And the same in India. The reasons for India are different. India's consumer demand has been growing only at 4.4%, 4.5%. Part of it is about the uncertainty of the economy. The second reason is because of the lack of growth in terms of formal jobs. A lot of the Indian people who are employed are in informal sector or in rural areas, or basically unemployed. India is one of the only countries in the world which actually lists unpaid employment as employed. So there are people who have jobs, obviously with their families and at home and in villages and on the farm, but who are not getting paid, which means that the incomes are low. And as you must have realized, if you're following the taxes, recent budget that the Indian government presented, they have reduced taxes for the middle class, the people who make up to 1 lakh rupees per month who will pay zero income tax, which means they'll have more money in their pocket. And the assumption is that they will go out and spend that money. So instead of giving taxes, they will spend the money and the government will collect GST. And so the government revenue will continue to accrue, but there will be spending, and that will trigger demand. And so manufacturing, etc., will lead, and the economy's growth rate will rise. But it's quite possible that people, instead of spending money on consumer goods, might do two things in India. One is that there has been a suppression of savings for the last few years. So they may try to save some of the money. They may decide to put some of it in fixed deposits or invest in the stocks, because the stocks are down at the moment. If I was in India, I would buy a lot of stock. And the second thing they might do is, many of them have taken a lot of consumer debt, things that they needed to buy. They bought it by borrowing money. And consumer interest rates are often very high. They may even have credit card debts. So they may first choose to pay off their debt and save, and then consume. So we don't know fully whether the tax reduction will immediately lead to consumer demand. So the lack of consumer demand in both China and India is going to have a negative impact on Asia's economy, and the growth rates go down. The second and the big issue is what people call is the Donald Trump's impact. His tariffs on China, his potential tariffs on India. He's already placed 10% tariffs on China. And he has also threatened to pose tariff on many other countries. He's calling them reciprocal tariffs, which means that if you are charging American goods any customs, then US is going to charge you the same amount or even more. So there are reciprocal tariffs coming. All of that are going to contribute to reduction in trade and reduction in exports, which means that economies are going to shrink. So that is the most uncertain and unpredictable factor, is which countries are going to be affected. And because China is such a mammoth country when it comes to manufacturing and cheap manufacturing, what is going to happen is that if China's goods are not selling in Europe and especially in the US because of customs and tariffs, then China might push those goods in Asia, which means that if Chinese made stuff at a lower price enter Asian markets, then it will dampen domestic production. It may increase domestic demand because good products are available at lower prices, but it will definitely impact domestic manufacturing, which will impact the job market domestically. So it's quite possible that unemployment might rise. The third and positive, you could call it a tailwind, is disinflation, which means that the rate at which inflation is going to increase in Asian countries is going to decline. So we have already seen the decline of inflation in most countries, except China, which is now coming out of deflation. And so there is a rise in prices because people are going out there and spending money during the holidays. China just had a big holiday season. People are now returning to work as we speak. So there has been noticeable spending spike in China, which is good because it generates demand and also uses up goods domestically, which have been manufactured. So there's lesser pressure for China to push them in the international markets. So the decline in inflation is going to be a positive thing for most Asian countries. Besides domestic demand, well, one of the reasons why there is an upbeat outlook about Asia, because even if it grows at 3.9%, lower than 4.3, lesser than last year's growth, it will be growing above the global average. So it is Asia, which is going to be the growth engine of the world. And one of the reasons for that is that most of Asian economies are going to be our infrastructure investment dependent. So all the development plans are capex related. India spends a lot. India has promised to raise its infrastructure spending. The reason why India's second quarter growth rate was at 5.4 because of elections, the government could not invest into infrastructure, but they promised to raise the investments in infrastructure in the third and the fourth quarter. So you see the same in Indonesia. You will see the same in other countries like Turkey. And China, obviously, is coming up with a huge stimulus. It's not so much as in investment in infrastructure, especially after the real estate market. I think that strategy for growth is on pause. But what Chinese are trying to do is to create stimulus, essentially with the goal of generating domestic demand. That's what they need to compensate for the decline in international trade. So these are some of the factors that are going to really impact the Asian growth rate. One is what will Trump do? Number two, will China's stimulus have a serious impact on domestic demand? Will other Asian countries increase their infrastructure investments in their own economies? Will there be an increase in domestic consumer demand? So these are the four things which are going to have an impact on Asian outlook. So please let me know in the comment section what you think. If there is some factor that I have missed, please don't hesitate to share with us, because the Asian economy is important. If the Asian economies begin to suffer, then they will impact global recessions all over the world. It will impact Africa, it will impact Europe and the US and everywhere else. Because if there is a slowing down in Asian markets, then they're not going to buy, especially the luxury items which are exported from Europe. Who's going to buy expensive shoes and perfumes and wines if the economy is not doing well? Because once the economy slows down, that means the stock market begins to slow down. And so the wealthy whose wealth is in the stock markets feel that they're less richer now than they were yesterday, and so on and so forth. So overall, it has a damping effect on consumer spending, essentially. And so it reduces trade, it reduces production, it may generate unemployment, etc. So that is why it's very important that the Asian economy continues to do well. And I hope that all the crazy things that Donald Trump is trying to do to make America great, to make America stronger, to make America richer, and to make America safer. This is his slogan now. I hope it does not have a major negative impact on Asian economies. So I will come back and talk to you again. The next marker that I'm looking at is to look at India's third quarter growth. So it should be out sometime in a week or two. And that number is very important. It has to be above 7% to compensate, because the last quarter was at 5.4%. So the key thing to look for is, has India's capital spending increased, and has the fact that the budget has proposed tax reforms has that motivated people to go out and spend money in India. So it will be very important if India begins to spend. It will also have a positive effect on China because China will then begin to export a lot of this stuff. If you're buying new phones, if you're buying new electric vehicles, you're trying to convert your roof into a solar roof, etc. So consumer spending in India will increase growth rates of India as well as that of China. So anyway, I hope you found this Asian economy outlook useful. And therefore, don't forget to subscribe to Khanversations, like this video, press the bell icon, and share this video with your socio-political network. Until next time, I'm your host, Muqtedar Khan. Take care.